Hi guys, Protorius Benu here. Welcome back from the short break on the channel. Before we continue with our series of videos on how to start trading forex, I've decided to share with you guys my trade bias prior to every week starting from today. And of course, I only trade gold, so all my trade ideas and knowledge I'll be sharing with you would be with respect to gold. However, the knowledge can be applied to any currency pair of your choice. So without wasting much time, let's get right into today's video. Alright, here we are on the monthly time frame of gold. For forex trading, all we do is to buy and sell, and then of course we do that along with the big players by determining the direction of the market. So looking at it, we normally, or personally, I do start from the higher time frame, of course the monthly time frame, and then try to do a top-down analysis and then try to get my trade bias and then trade along with the banks or the big players. So ideally, you can start looking at this area here that was taken by this bullish run here, giving us this higher high, a little bit of retracement into these zones, and then the bulls came in and then price continued its bullish move. Okay, so we have this fair value gap area here that was created. We expected price to come, give us that candle signs respecting the zone, but eventually price find demand zone or whatever kind of forces that came in to push price higher, taking away this liquidity zone, and then of course creating a new higher high. Then we clearly see the higher high, lower high, higher high, lower high, higher high, lower high, and then higher high. Then of course the price action is bullish. A little bit down onto time frame, give us the weekly time frame, where of course you can see the higher high, lower high kind of thing again. This liquidity was swept by this bullish run, giving us that retracement back into these zones. Of course, the fair value gap here was respected. Then we do not actually want or anticipate price to take away the low of the move that gave us the respect to the fair value gap. All right, if price have taken away this low, then of course we could look for further price action to confirm the bearish move. But then of course we have the bullish move all the way up, taking away this particular higher high, a little bit retracement into these zones. Do not really get into the fair value gap that was formed, so we still keep the zone, anticipating price to come back into it. Then it gave us that bullish run, taking away the liquidity point here, and then of course the third candle here confirming a fair value gap. Okay, if you do not know anything about the formation of fair value gap, in one of my videos I've shown everything with regards to the formation of fair value gap. Kindly check it out. But on the weekly time frame, so we can see the fair value gap that has been formed, confirmed by this third candle. That alone is an indicator for me that yes, of course we are in a bullish run. But looking at price action right now, I do not expect price to get back into this fair value zone. Of course, with a doji candle form here, a little bit of retracement into 30, 40 or 50% of the doji candle, and then we can have the bullish run. So for instance, Monday we could have that little bit of choppy movement, giving us the fake direction to the downside. But then of course Tuesdays, Wednesdays, the daily time frame is actually very important when it comes to forex trading. Why? Because if you are a trader, if you trade on daily basis, which most of us do, your trade setups will be with respect to the daily time frame. Think about it this way: if you are a day trader, you'll be taking trades on the 1 hour, 50 minute, 30 minutes, and whatever price action that happens on these time frames would be with respect to the direction of the daily time frame. So as a trader, you do not want to get the direction of the daily time frame wrong. If you do, then you have a losing day. All right, that was just a tip for us. Now back onto the video. We have established the fact that the monthly, the weekly time frame are bullish. Now, having that in mind and looking at the daily time frame, we could also see the higher high, lower high, higher high, lower high kind of thing on the daily time frame. And then looking at price action currently, with our liquidity zone, of course, a low liquidity move to the upside. And then we have major liquidity here, and then somewhere around here too. I forgot to put or to indicate it right there. All right. So yeah, liquidity there. Now looking at current price action and then combining it with fair value gaps. Here we have this weekly fair value gap zone, which was refined, I think, all down to the 4-hour time frame. And then we have on Thursday price just give us that perfect reaction or respecting the zone perfectly. And then we have this low liquidity move up to target this liquidity zone here. Then with that alone, combining it with liquidity, I am through the direction on the daily time frame. Of course, I do anticipate that price should open on Monday. Price should not actually get back into these zones. Yes, we could have a little bit of down movement, but it is just a fake move to me. For me personally, it would be a fake move, possibly into this zone, and then kind of that would be on Monday. Then on Tuesday, I could have that bullish run targeting this major liquidity here. Now let's see what the 4-hour time frame has for us. Yes, of course, onto the 4-hour time frame. This is where things actually look much simpler for me. You do not want to complicate things for yourself in terms of determining market direction and then trade bias. Here we are, yes, into that fair value gap. You see the fair value gap, it was very refined, and then that is a weekly fair value gap that was refined. So I expected price to get into it, and then yes, price did. Now here, just looking at this closure to this particular candle, which will form a fair value gap here, then of course that area will be a point of interest, right? So on Tuesday, Wednesday, you could want to anticipate candle signs here, looking for all your trade setups or your entries within that fair value gap if it did form. So ideally, I am bullish on gold. All right, that is my trade bias. What do you think? Right, let me know in the comment section. Now, one thing about determining trade bias is that you could start from the higher time frame, which could give you a bullish direction, but then if you get down lower into time frame, then you realize that it says different thing. It is possible, it does happen, it confuses traders. But for me, what I do is that the higher the time frame, the longer price will take to give you that direction. So if you know the direction which on the higher time frame, monthly, weekly, keep it. It's very nice. But if you do determine the direction on a daily time frame which says otherwise to the higher time frames, then you want to stick to the daily time frame. Of course, if we have determined a bearish direction with respect to this video, then I would have stick to that direction instead of the bullishness. All right, that will be it for this particular video. Peace out.